a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
If you want to invest in healthcare, you may want to consider healthcare ETFs. And our ETF research director, Nina Mishra, will tell us why. So healthcare is performing well.
Yes, healthcare is in fact now the best performing sector in 2018.
Yeah, who would have thought that?
It's a bit surprising. Healthcare is like the unsung hero because people keep talking about technology and consumer discretionary. Not many people talk about healthcare.
Right.
But here I have this chart from State Street Spider. And you can see that healthcare is now the top performing sector. In 2018, it's up 12.4%. Though technology and consumer discretionary are not far behind. And healthcare especially started outperforming other sectors in the past few months. It was, in fact, the best performing sector in Q3. And the main reason, I think, is attractive valuations of healthcare companies. You know, many big money managers and retail investors too, they are getting worried about stressed valuations of technology stocks because tech has been doing so well for the past so many years. So during the third quarter, we saw that some big money managers sold some tech stocks like Facebook and increased their positions in healthcare stocks. Now these companies, healthcare companies, also have cash-rich balance sheets. Now they have been making a lot of money, and also thanks to tax reform, many healthcare giants, they were able to repatriate their overseas cash and spend that cash on dividends and share buybacks and also for mergers and acquisitions. Another reason is that healthcare is considered a defensive sector. So when the market is uncertain, investors tend to put more money in defensive sectors like healthcare. And historically, healthcare has done well when rates rise. And that is the scenario as of now. We know that Fed has been raising rates and will continue to raise rates. And that is one of the concerns for the stock market. Investors worry whether the central bank will raise rates more aggressively than expected if inflation continues to rise. So in this scenario, healthcare becomes an attractive sector.
And we're getting older.
Yes, that is a long-term factor, you know. Global population is aging and demand for healthcare products continues to rise. And particularly in, you know, emerging markets and developing countries where governments were not spending much on healthcare and even consumers were not spending much on healthcare earlier, but now as incomes are rising and economies are improving, the governments and individuals, they're spending more on healthcare. So that is a long-term tailwind for the sector. There is political uncertainty, especially surrounding the fate of Obamacare.
Isn't there always some kind of political uncertainty anymore?
Yeah, Affordable Care Act remains uncertain. But otherwise, I think the outlook for sector looks pretty attractive as of now.
Okay. Well, do we want to take a look at a couple of these here that you brought with you?
So
you mentioned the SPDR before, right?
Yes, so this is the SPDR. You can see the SPDR sector ETF here too. So the first one we are talking about is the SPDR Healthcare ETF, the ticker XLV. It is the most popular healthcare ETF, quite big, more than 18 billion in assets under management. It has expense ratio of just 13 basis points, and you can take a look at this ETF by going to the quote page on Zacks.com. It has an attractive dividend yield to more than 1.4%. You can go to the external home page using the link on Zacks.com and look at further details and holdings. As I mentioned, the expense ratio is very attractive, 13 basis points. And if you look at the holdings, you will see that Johnson & Johnson, United Health, and Pfizer these are the top holdings. And looking at the industry allocation, pharmaceuticals, then healthcare providers and services, and followed by healthcare equipment and supplies. Biotech, which is the riskier sub-industry within healthcare, accounts for about 17% of the portfolio.
All right, and then Vanguard has a healthcare product also.
Yeah, so this is also pretty similar, very popular healthcare ETF. It has almost 9 billion, 8.6 billion in assets under management. It is one of the cheapest healthcare ETF, charges just 10 basis points. And again, you can go to the quote page on Zacks.com. It has a dividend yield of 1.23%. You can read our articles, read the research report for this ETF. Now this is a Zacks ranked number 1 strong buy ETF, and the other one, XLV, is also a Zacks ranked number 1 ETF as of now. You can also go to the external homepage using the link on Zacks.com, and you can take a look at the holdings and other details over there on Vanguard's website for this ETF. You can see that for this ETF, in fact, biotech is the, pharmaceutical is the biggest sector for this ETF, biggest in sub-industry for this ETF as well, accounting for about 29%, and then followed by biotech at 20% and healthcare equipment at 20.2%. Like XLV, Johnson & Johnson, Pfizer, United Health, you see similar holdings for this ETF as well, as both are market cap weighted ETF targeting the broader healthcare space.
Okay. And so how do they compare to the broad market?
So on this slide, I have the comparative performance, year-to-date performance of XLV, VHT, and that we discussed, and I've compared that with the broader market ETF, SPY. As you can see, the Vanguard product is up more than 13%, the Spider product is up a little more than 12%, whereas the broader market is up maybe about 6% during this time period.
Do you own either?
I do own VHT in the ETF investor portfolio that I manage for our clients.
Okay, thank you for that. Don't forget, more ETF information is always available for you to peruse in the ETF section of Zacks.com. Use the Funds tab in the top toolbar. It'll help guide you right to that section. Also, don't forget, Nina has an ETF podcast that you can give a listen to each week on the podcast page of Zacks.com. With Nina, I'm Terry Ruffalo.